The more peace of mind that your parents or grandparents or great-grandparents have, the more that benefits the entire family unit, which then creates stability and sustainability on whatever is most important and next. And I remember you saying this to my parents. You said, if this can make what you're already doing better, is it worth exploring? So this is not I'm replacing anything. It's can we bring this player off the sideline that you didn't even know you had, put them in the game when you're ready, and feel even better about what you're already doing?
The going rate today, or what typically is said, is 4% is a safe withdrawal rate. Some people say as low as 3%, but that's without any sort of volatility buffer in place. Once you have a volatility buffer in place, then that changes the game completely. And so reverse mortgage, whole life insurance, those can be options, volatility buffers that can keep pressure on your accounts to grow even in those downtimes.
The most important thing I want you to see from this is that a reverse mortgage, folks, is a growing line of credit. Most people didn't know that. If I said you've got a fourth bucket with $2 million in it, and so as we talk about it and what you all do with whole life insurance, and to say, hey, there's some things you may not know about this that could be, you educate people first, and you got to move them from, oh, I thought it was this, and then you say, well, it is that, but it's also this.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome back to Cashflow Legendz. Nate and I are absolutely thrilled with the opportunity to bring on our guest today, Don Graves. We just want to tell everybody that Don's going to bring an immense amount of value. So with you sharing your time today with us, we're very grateful for that. Please let us know if you have any questions. We'll make sure you can connect with Don through the show notes. What he's taught us in a short period of time is just a great reminder of you can never know everything, and you need to get around people who understand and are experts in certain fields. So Nate, I'm going to let you intro Don a little bit, and then we'll let him work his magic, so to speak.
Yeah, we always talk about the power of our network and how important it is to have solid people around you that are experts in certain areas and things like that, but also the ability to ask someone through, someone having relationship capital, being able to just ask the question, who do you know that you could connect me with regarding this or that? And Brandon, many, many years ago, we used to think whole life insurance was the worst place in the world to put your money. We thought everybody was crazy who participated in that. And then we were introduced to another financial topic a couple of years ago we used to think was crazy and nobody should ever do that. And I think one of the things that's safe to say is when you are unfamiliar with a topic and you have formed your opinion based off of limited information, you need to press further into that to see where that leads you and takes you. So I say all that to say, we had a question a while back. Who do you know? We went and talked to our friend and mentor, Trent Fortner. Who do you know in reverse mortgages that could help us really start to understand this at a deep level? And he connected us with our new friend, Mr. Don Graves, who's got 25 years, is considered an expert in this field. And so we're happy to have you here and just to help people understand what this is and what it's not. And Don, before we really dive into it, I heard that you got a story about Jesus and how he was the first reverse mortgage. So I'd love to hear about that.
Wow, what an introduction. Thank you, Nate. Thank you, Brandon. It's an honor to be with you all and to share with your audience about a subject I am passionate about, which is how to use your home's equity to increase and improve your retirement outcomes via the reverse mortgage. Now, sometimes you ever mention reverse mortgage at the barbecue? What happened?
People run.
Three people dove under the table, 3 people left the table, and your Aunt Janie made a shank out of a plastic knife and fork and came after you. I mean, you bring up reverse mortgages and it's just dangerous what comes out of that. But I hope today that we can take a little bit out of the spooky out of the reverse mortgage. 25 years ago, I started doing this. Before that, I was president of a nonprofit here in Greater Philadelphia, Habitat for Humanity, the local chapter. chapter. And my sister called me and she said, hey, little brother, I've got a business I think you should look at. And she described, and I told her, oh no, you're going to go to jail for that. You're taking old people's houses, and I don't want anything to do with that. And it took me a whole year of research. Finally, I came back and I said, you know what? This is a vital and viable resource for the right person. But I'm a faith man. I'm a believer. And so as I began to do this, one year I got an award. I did more reverse mortgages than anybody in the United States. And they brought me up on stage at some conference in Las Vegas, and they said, you know, what's your secret? What's your motivation? Now, here's how you shut down an award show. I said, well, Jesus kind of did the first reverse mortgage. So it was good enough for him. It was good enough for me. And quick, go to commercial, go to break, get this guy off the stage. And someone came up afterwards and said, what do you mean Jesus did the first reverse mortgage? I said, well, kind of. I said, it's found in the Gospel of Luke, chapter 7, verse 11. I call it Thank Heaven for 7-Eleven. And it's a story of a widow in this little town called Nain. Her only son has died. And the funeral procession is leaving town, and Jesus and his disciples are coming into town, and he goes up to this widow woman and he says to her some fighting words. If you're from Kentucky, don't say this to the widow woman. He says, stop crying. And those fighting words. And then he reaches down to the son in the box and he resurrects the boy and gives it back to the mother. And I asked people, what type of resurrection was that? And folks said, a good one. I said, well, I imagine if you were dead, they're all good. And I said, what else? They said, I don't know. I said, we have some clues. I said, it's a widow. What type of life do you think a widow would have had in Bible days? They said, pretty bad, tough. Yeah, we're called to take care of the widows and show concern for them. But I said, but she had a son. She had an only son, and he died. I said, so when Jesus resurrects the boy, what does he really resurrect? And someone caught on. He resurrected her economic vitality. I said, there was a provision in Scripture that if you had a widow, she could mortgage her property, if need be, to live. I said, Jesus, by resurrecting the boy, see, she lost her pension with her husband, and then her son died. She lost her 401k. I said, so she's got nothing. So Jesus resurrects her, and he stops her from having to mortgage her property to live. And I said, so he did kind of a first reverse mortgage, tongue in cheek. But what it meant for me is that Jesus is concerned more than just for our soul and going to heaven. He wants to make sure we've got the economic wherewithal to live here on earth. And that's my motivation. That's what drives me, is to say, how do we live here on earth when our resources may be limited? We're heading into retirement. It's going to be longer, less predictable, and more expensive. How do we help people to navigate that? So to me, that's a spiritual journey. That's a faith journey. That's an anointed journey. So I hope I haven't said too much. I hope people haven't stopped listening. And,
that was a great start to the show. I'm going to put it up there as probably top 1 or 2 stories that we've heard so far. So you're doing great.
Well, thank you, sir. Thank you.
Yeah, there's one thing, Don, that as we began to learn from you, it was very clear to Nate and I after our first hour or 2 interacting with you that you believe in this through and through, and you've spent the time, energy, and effort learning how to communicate it in a way that makes sense and is not spooky, which is very similar to how Nate and I view the opportunity we have with Whole Life and how to explain that. And the thing you've said the most that I really appreciate about you, and I've actually borrowed this often in different ways, you make it very clear when working with anyone that you've had thousands of conversations. I think you say 16 or 17,000, and there's roughly 3,000 to 4,000 that have decided to move forward with this approach of utilizing this tool, which has been around for a long time, to make what they're already doing better. Would you touch on what you normally say after you say that to the numbers? Because I think it's an important piece for any of our entrepreneurs listening or want to be entrepreneurs, connected to Nate's point of relationship capital. We're not meant to work with everybody, and not everything we do is going to be perfect for everybody. And that is a good thing, not a bad thing.
Thank you. I want to unpack that. And if I talk, you remind me the question you asked me.
Yep. Got it.
But in 25 years, I've had about 16,000 consumer-facing conversations. Out of that, about 3,000 people went forward to become my clients, actually obtain a reverse mortgage. And that tells us 2 very important things. Number 1, I've talked to a lot of people. And number 2, I know that this is not the right resource or fit for everybody. And so I say, I don't know if it's the right thing for you to do or not. I want to ask you a few thought-provoking questions, explain the program, answer all your questions, and then we'll determine what the most appropriate next steps should be. So I start every conversation from the point that I don't know if this is going to be a good fit or not. Someone asked me, well, Don, when is it not a good fit? I said, I've already written about that. I just wrote an article in Retirement Daily, 16considerations.com. So someone wanted to say, Don, 25 years to say, here are 16 things you should consider before you do a reverse mortgage. They can find that at www.16considerations.com. So I'm not going to unpack, but what is a reverse mortgage? A reverse mortgage is a federally insured loan for retirees age 62 or better that allows them to convert a portion of their home's value, turn that into tax-free dollars. You do not give up ownership or come off title to the home. You don't have to make any monthly mortgage payments, and you'll never be required to repay more than the loan is worth in case you're upside down in the future. It's really one of 4 buckets that most people have in retirement. So if you're watching this and you've got a pen or paper, I'm going to give you a few things that may be valuable to you. But most people, not everybody, but most people will have 3 primary buckets in retirement. Let me pause right there. Hey, Don, I'm not in retirement. I'm 40. I'm 52. I'm 37. Let me say this. Some things in life are not designed to come to you, but to come through you to someone else. So I'm going to assume if you're 37, 45, 52, that you weren't hatched or delivered by some stork, that you probably have someone in your family that's still alive, a mother or a grandmother, an auntie, someone like that. So the information you're hearing today may be designed to go through you to bless and to help somebody else. All right. So the reverse mortgage, a federally insured loan for those age 62 better, allows them to convert a portion of their home value, turn it into tax-free dollars. And so what can we do with that? You don't give up ownership, come off title. It's not, sometimes you hear that story that, oh, the reverse mortgage, that's the loan where the bank loans you the money. When you die, they take the house. And I tell folks, no, listen, four letters, IJAM. Hey, folks, it's just a mortgage. It's IJAM. Just yell that out. IJAM.
I jam.
It's just, I said, don't put this over in Spooky Land. You remember when you went to the amusement park, Brandon, and Spooky Land where it was the haunted house and all that? Mama said last little girl went in there, didn't come out. And then we put reverse mortgages. Oh, that's in Spooky Land.
Yeah.
Said,
Whole life insurance is over there too, Don.
Yep, that's in Spooky Land.
Yep.
And we're trying to get it out of Spooky Land back to where it belongs with the Ferris wheel and the merry-go-round and all of that. So the reverse mortgage is simply a tool. Now, most people have 3 buckets in retirement. You've got your income bucket, Social Security, pension if you're lucky, employment if you're still working. 2, you've got your investment bucket, IRAs, 401ks, brokerage accounts, savings, all of that. Number 3, you've got your insurance bucket, fixed and variable annuities, whole life insurance. Now, each one of those buckets has a spigot on it, and you can turn that spigot on and money will come out. So here's the question. Is that all the buckets you have in retirement? For those who are listening, your mom, your grandma, is that all the buckets? No. 87% of retirees have a 4th bucket called housing wealth. And that bucket potentially has millions of dollars in it. And so when you begin to understand the reverse mortgage, you begin to say, well, wait a minute. If you had a reserve bucket that could be set up growing for you at 6 to 8% tax-free, that could potentially surpass $1 million, would you want to see how it works? See, that's the question. That's something that a lot of people don't know. Let me share my screen because I want to share this. So here is a reverse mortgage, kind of a chart of benefits. And someone says, well, wait a minute. Mama's in a $600,000 house and she's 65 years of age. How does that work? Well, on the screen here, you can see that a reverse mortgage is making available today about $199,000 for mom and dad in their home. But here's the part that's very exciting. The unused portion of that line of credit, this is called a growing line of credit that started here, but look, 20 years later, it's $746,000. 30 years later, it's $1.5 million. Now, the most important thing I want you to see from this is that a reverse mortgage, folks, is a growing line of credit. Most people didn't know that. If I said you've got a 4th bucket with $2 million in it, what would they say? What you talking about, Willis? That was, you all don't know that reference, but
I do know that reference, actually. Yeah. Oh, yeah.
And that's what they would say. And so as we talk about it and what you all do with whole life insurance and to say, hey, there's some things you may not know about this that could be, you educate people first and you got to move them from, oh, I thought it was this. And then you say, well, it is that, but it's also this. Reverse mortgage is the same way. There's some strategic things that you can do to help your mother, grandmother, or if you're a retiree listening yourself, could absolutely change some of your outcomes.
Don, I really liked the some things meant to come to you and some through you. I think that is a great little one-liner for the privilege that we, I think, all have in sharing information that can be very valuable. And what I love about even, most of the people that are listening to this that are probably around Nate and I's age, a little younger, a little older, is that the more peace of mind that your parents or grandparents or great-grandparents have, the more that benefits the entire family unit, which then creates stability and sustainability on whatever is most important and next. And I remember you saying this to my parents. You said, if this can make what you're already doing better, is it worth exploring? So this is not I'm replacing anything. It's can we bring this player off the sideline that you didn't even know you had, put them in the game when you're ready, and feel even better about what you're already doing. So
can you say that line again? I need to write it down.
Yeah, you said we're quoting Don Graves here. You said, if it can make what you're already doing better, is that worth exploring?
Oh, I like that.
Yeah,
boy, I was in rare form. I bowled
your A game that day.
I bowled a 300 that day. That was a great question.
So this is another beautiful connection of relationship capital, because as you're seeing in the grand scheme of Nate and I's life, we've interacted with Don a minuscule amount, like a grain of sand. But the value that he's brought because he's willing to share something he believes in that also can bring value to the people that we care about proves that relationship capital is one of the most important things that most of us aren't really taught to think about, which goes back to the Bible and remaining selfless and helping others and wanting to provide value beyond what it does for you. And so I love that connection. Now, what's one of your favorite stories about the reverse mortgage in your 25 years that you like to tell, even if it's from somebody coming from the spooky land to the Ferris wheel, and how that evolved?
There's so many stories, and I like when people get it. I like when the aha moment comes and they say, wow, I didn't know it. I'm going to share, if you'll allow me. Here's what's exciting. Let me share the screen here. And there are 52 strategies for the reverse mortgage. I want to just share one here today, maybe two. Put this up on the screen. The people, I want your listeners to think about the last time they went to an event where the participants were age 55 or older and own homes. Now, that's typically Thanksgiving, a barbecue, 4th of July, maybe Christmas coming up. Are you all? And for me, I was just with my family on Thanksgiving and with people. And I said, now, of the folks in the room that are homeowners, 55 and older, how many of those people, what percentage do you think have a mortgage still on their property, a home equity loan, line of credit, or some other second mortgage? One of those four. And 90%, 98%, 85%. I said, right, the majority of retirees have some sort of loan payment on their property. This is true. And here's the question I often ask people. I said, if eliminating a monthly mortgage payment meant your retirement savings could last significantly longer, would you want to see how it works? Now, you ask that the most reasonable people, they're going to say, yes, how, or what you're talking about, Willis. I said, you're already making a monthly mortgage payment, Mr. and Mrs. Jones. I'm curious. If you could turn your mandatory payment into a voluntary one, would you want to see how it works? Yes, no. Yes, how, or what you're talking about, Willis. Well, there's only one loan in America that allows a retiree to turn their mandatory monthly mortgage payment into a voluntary one, and that's the newly restructured reverse mortgage. Folks, the reverse mortgage started in 1961 in the United States, came under the authority of the federal government in 1988. So 36 years, it's been one of three government-sponsored retirement programs. Social Security, 1935, Medicare, 1965, and the home equity conversion mortgage, 1988. So it's not new, it's not dangerous, it's not spooky. What is it? iJam, it's just a mortgage. But you have to use it wisely, right? Anybody can use an instrument in an unwise way. But look at Steve and Barbara. And I tell folks, this is the majority of people in retirement. So Steve and Barbara have a $500,000 IRA. They're going to retire. They want to take $30,000 out this year. And that's aggressive. But here, they've got a mortgage of $200,000 and they have a payment of $1,500 a month. And they're concerned. Are we going to run out of money? Do we have enough? Are we going to have to cut back our lifestyle? So they did a reverse mortgage. And the reverse mortgage, the amount of money you get is based off your age of the youngest, the value of the home, and interest rate. For them, $224,000. Now, it must be a first mortgage. So the first thing it did was paid off that $200,000 they owed. And what's left over as a line of credit. We're not talking about that today. Let's talk about what the majority of Americans who have a mandatory monthly mortgage payment coming into retirement, what this could do for them. So the first thing, what's the benefit? It eliminated that $1,500 after-tax payment. That's substantial, right? That's $18,000 a year. But that's after tax. They're taking that money out of a qualified plan of taxation. So it takes them $1,900 a year, $1,900 to net $1,500. So if we eliminate that, $1,900 times 12, that's $22,000 that stays in their retirement account. So we reduce the amount that they're going to draw in retirement from $30,000 a year to $8,000. That means their portfolio virtually will never run out of money. We minimize the taxes they're going to pay, maybe lower their tax bracket, and it's an amazing thing. And so I wrote a booklet called 10 Benefits of Eliminating a Monthly Mortgage Payment. But the question was, when people discover, when I asked the question and you said, hey, what's the biggest story? It's usually around this eliminating a mortgage payment, and it comes in the form of a sound. Let me mimic it for you. Mr. and Mrs. Flintstone, what would retirement be like if you didn't have to make a $1,500 a month mortgage payment? Whew. Did you hear that? Right. I don't need to study the Greek or the Hebrew. I don't need the pastor or the elders to tell me. I'm doing it one more time for your listeners, because listen, if you're watching this, the next time when you're with your parents or grandparents, and by the way, I asked children or grandchildren, I said, are your parents experiencing the type of retirement they imagined, they earned, they desired? Or are they having some concerns? Now, when I asked that question, the children don't actually know that they know the answer, but they do. See, the answer came at Thanksgiving. He said, Mama, did you make your special seafood salad? And Mama said, you know the price of seafood these days? And then you said, hey, you and your grandpa going on your cruise next summer? No, we do that every 3 years now. See, you hear the pain point. So when you ask, are you experiencing the type of retirement you envision, or do you have some concerns? You ask that to your mom and dad or your grandparents. You're going to hear some things. And I say, do they currently own a home? If they say yes, there's a world of opportunities to help them or to serve them or at least understand it. And so you ask them, hey, are you guys still making a mortgage payment? Yeah, baby, we are. I'm curious, what would retirement be like if you didn't have to make that monthly mortgage payment? And just stop talking. And here's what you're going to hear one more time. All right, let's keep going. Now, don't let me keep talking on the porch, because the possum and the sweet tea is going to come up in the story in a minute. So
I see Nate has a question.
Yeah, so Don, you only have to be in your early 60s in order to qualify for a reverse mortgage.
One person has to be 62. The other only has to have reached age 18. So you can be 70 and your husband to be 20, and you can do a reverse mortgage except for Texas.
So with that means someone who is early 60s often is healthy enough to qualify for life insurance. I would love to kind of hear your perspective a little bit on the power of pairing up a reverse mortgage strategy with a whole life insurance strategy.
Wow, that's a whole episode right there, guys.
We might have to have you back on too.
I cut my teeth. I've been 25 years. So about 22, 23 years ago, I had a radio show. I was on Christian radio here in Greater Philadelphia. And I took on a partner. And my partner was a elite practitioner, insurance kind of philosophy. And I didn't know. I thought life insurance was, when you die. Well, I got to spend 1 hour every Thursday with Scott learning about all the facets of life insurance for living and for generational transfer and all. I had no idea. And so because he got to hear about reverse mortgages and I was hearing about life insurance, we were able to really talk through a lot of things that are possible or feasible. Let me go back. I'm going to answer that because I want to, it's one thing I talk about I have a 6-hour course, and it's one of the things I talk about there, but I want to answer the question. If I can get back to this slide here, I want to show you something slightly different. While I search for that, tell me why you bring that up. I think it's a great question I'm going to answer, but tell me.
Well, know all the things that we know about reverse mortgages now, and we know the things that we know about whole life insurance. I was explaining to my mom that if you have the right strategy, there is really no downside whatsoever to implementing something like this.
The 4 buckets we talked about earlier. Your income bucket, Social Security, pension, employment. Your investment bucket, IRAs, 401ks, brokerage accounts, things like that. And your insurance bucket, fixed and variable annuities, whole life insurance. Each one of those has a spigot on it, and you draw money out. Why is that important? Because in retirement, you can expect emergencies to happen. and you need money. Expenses, I'm doing an article just on homeowners insurance and how that's derailing a lot of retirement happiness. And then enjoyment, things I want to do, and where do I get the money from? So when you say, one of the buckets I always talk about is the insurance bucket. What happens when you have a insurance policy, a whole life cash value that you can draw from? It open, and then you combine it with what you see on the screen. So here's a client that's got a reverse mortgage, age 65 here, and they set up their reverse mortgage line of credit. Now they're see it here, column 8. So it grows. This says it grows 224, and this is older. It grows a little bit more robust. Now, some of the insurance applications is it better to have 3 buckets of money versus 4? One of the things some people say is, Don, I can leverage my house, and if I eat some of my house to accomplish a few things, can I replenish or repay back the reverse mortgage when I move or depart the house for my life insurance? Yeah, that's a very simple way to do that. I said some other ways are you want to buy another life insurance policy because you understand, you've listened to Nate and Brandon, and you've got the income to do that, the assets, but you're a little bit concerned about, they come back, the premiums are going to be this much. But I want you to notice the question that they asked you. They said, Mr. and Mrs. Jones, if we could use your home to replenish the premiums you're using for this life insurance policy, would you want to see how it works? And let me say this, we're not using the direct proceeds of a reverse mortgage to pay for a life insurance policy. We're using it, if we want to, see this 224, I'm circling it to say, now your client could say, all right, well, my premiums are going to be $1,000 a month, $12,000 a year for this. And they know the benefit of that. And sometimes an advisor will come and the client will say, wow, $1,000 a month. Boy, that's something. And you ask that question. Well, here, their reverse mortgage line of credit is $224,000. If they decided to send this money into their bank account every month as a monthly payment, it'd be a little over $1,000 a month. If they did it for 5 years, it'd be $4,000 a month. We can do 10 years and things like that. And so when you have life insurance or you desire life insurance, there's a lot of things you can do because you got a whole nother bucket in play. One of the things I think Mass Mutual had, they were selling insurance. They had a booklet called Taming the Bear in Retirement. It was about a doctor who bought a life insurance policy at age 45. And age 65, it had cash value in it. And her portfolio took a terrible hit. And she didn't want to take money out of her portfolio. And they said, well, you can take it from a cash reserve. You can take it from this whole life policy. And then you can preserve, and that's going to add life to your portfolio. That's a way to use cash value life insurance. And I said to Mass Mutual, I said, what if she didn't have life insurance, didn't have enough, or didn't want to use it? They said, oh, there's nothing she can do. And I said, no, not so. I said, she's sitting, 87% can use their 4th bucket and combine that with life insurance they may have or use it alone. They can take money out, put it back. I said, you've got a tool along with your life policy that you can take, you can borrow from it, put it back. Use your reverse mortgage bucket. Now you've got so much freedom and flexibility. And I don't want to say the possibilities are endless, but there's certainly more than most people have imagined.
Don, what you're illustrating so well is one of the big parts of our process when people ask what we do is we start with figuring out what you're already doing and getting crystal clear on that. And most people have never looked at all of their financial physics, as we call it, in one place, which is why we love the LEAP model, because it requires us to commit to going, well, what are all the things I put money towards and what are they creating? And then when we see that in that one place and we begin to be willing to learn something new, that, a reverse mortgage isn't bad, that it's been commercialized as something that it really isn't, just like whole life isn't bad. These are just tools and products that can work together in harmony depending on each person's situation. And then you really help them get to the point to where they go, oh, these are all just products that are going to allow me to accomplish what matters to me most. And it isn't for everybody, like you said. I figured quick math, about 20% of the people you talk to that are consumer facing become a member that you work with. But the reality that we're all illustrating is, do you want more choices or less? And the more choices somebody has, the better they start feeling about what they're going to do next. Tell me if you agree with this from what you've seen in your years of experience.
Absolutely.
But most people that we talk to stay stuck where they are, even if they admit they're miserable, because they don't know what the other options are. And they have believed what, I'm going to say, mainstream media has taught, but it could also be what you learned growing up. It could also be, what your grandfather said to you. And not that those things were bad, but it just might have been a half truth or a bad experience. How do you overcome skepticism in your practice in a way that I know is genuine because I've interacted with you enough, but how do you approach that for anything anybody's skeptical about?
Sure. And the reverse mortgage world, I tell people that story that when my sister told me about it, I said, "You're going to jail."
Yep.
I don't want anything
Yep.
to do with it. And a year later, I said, let me look at it. There were 5 housing wealth counselors that did reverse mortgage counseling, which is a requirement. The government requires it. There were 5 in my area. I called all 5, got breakfast with 3, and I sat down and I said, what's the gotcha, the aha, the fine print? HUD, the United States has a home ownership center in Philadelphia, downtown, the Watermaker builder. I got an appointment, went with them. I sat with Fannie Mae AARP, and I did all of that. Asked the same question. What's the fine print, the gotcha, the aha? Because I knew a good name is preferred more than great riches. And so I had to be able to look people in the eyeball. And if I said it's not for you, which I've said more than I've said it's for you, there was a conviction. But also if I said this seems like this is going to be a good fit, there would be conviction with it. And so how do I get over the skepticism? I spend a lot of time with education. People, before you get to me, there's a discovery call with my team. Let's make sure it fits. We ask you to consume some content. Watch my master class. It's an educational class, housingwealthmasterclass.com. I said, watch that. And then you make your own decision. You self-select. And if you say, hey, Don, then I'll do the consultation with you. But you're already educated. We've dispelled the myths and mythologies. And now we're just focused on, here's a federally insured program that's been around 36 years. It's now in 19 countries of the world. And the United States was one of the last to the dance. And I said, so it's not spooky. And then by the time they get to me, they know it's not spooky. And so now, but there were people in the early days that got all the money, went down to the riverboat and spent the money, and they showed up on the front page of the newspaper saying, I hate reverse mortgages, it's the worst thing I ever did. Or again, back to the barbecue, Uncle Junebug comes out of Cousin Tracy's spare bedroom, Nate, and everybody says, Uncle Junebug, what are you doing in Tracy's spare bedroom? He says, I live here now. And what do you mean? And here's what Uncle Junebug said, Nate. He says, I got that reverse mortgage and I lost my house. Now, your family won't make this sound, but my family makes this sound. I knew it. And Sunday, they go over to the Baptist church and they try to get a note to the deacons and say, we need an announcement. Monday, they're at the barbershop. Tuesday, the beauty salon. Wednesday, the Kiwanis meeting. And by the end of the week, everybody in town knows someone who had an uncle, had a cousin, had a grandfather, got a reverse mortgage and lost his house. And then they come to you and I and they say, Don, is that true? And I look them in the eyeball and I say, absolutely true. Oh, you're the evildoer. I said, I'm not the evildoer. Uncle Junebug didn't tell the whole story. See, when you get a reverse mortgage, there are 4 things you have to do. Number 1, you got to live in the property. 1, to take care of it, keep homeowners insurance in force. And number 4, pay your property taxes. I said, Uncle Junebug neglected to tell you he hadn't paid his taxes in 4 years. And I said, so it was the township that took action of foreclosure, sheriff sale, tax lien sale. It had nothing to do with the reverse mortgage, but that's not a good story to tell. And so I cover all that in the masterclass. And so we get rid of those mythologies. Certainly in the early days, there were bad players. You've seen that in the insurance industry. There's sometimes people were bad actors. And then regulators come and they purge the bad actors. Happened in our industry. Haven't seen that since around 2008. They purged a lot of bad acts. 2013, the Reverse Mortgage Stabilization Act protected spouses who were under the age of 62. It put some protections in. And so I can certainly say it's solid. The company I'm with, I'm the National Business Development Manager for Fortune 300 company. I won't mention their name, but we do the most reverse mortgages in the space. And I give leadership to a team about 200 folks over 49 states. So it's solid, it's reputable. Get the information, but don't dispel it. And particularly if you've got a grandmother, you've got a parent, and you ask them, are you experiencing the type of retirement you imagine? Are you having some challenges? Be sure, and they own a home. I know 87% of them do. Be open to at least saying, hey, you may want to look at this master class. I saw some things on the podcast with these guys I know and trust, and it's a little different. This reverse mortgage may be a little different, mama, grandma, than you thought. Anyway, that's how I kind of overcome dispel myths with education. And I don't have to do a lot of work. Once people, and you all, same with your insurance, once people kind of see what they see, I won't say it's not what granddaddy taught you, but it's different. Let's just say life insurance, because I didn't know. 22 years ago, I didn't know. Hadn't heard about LEAP, didn't know about PS&G and these 27 boxes. I didn't know. But once I learned, I couldn't unsee it, right?
Yep.
I couldn't unsee it.
Well, something you alluded to earlier was essentially this idea of having a volatility buffer in retirement years. And people, the going rate today, or what typically is said is, 4% is a safe withdrawal rate. Some people say as low as 3%, but that's without any sort of volatility buffer in place. Once you have a volatility buffer in place, then that changes the game completely. And so reverse mortgage, whole life insurance, those can be options, volatility buffers that can keep pressure on your accounts to grow even in those downtimes.
Absolutely. And see, someone says, Don, my clients don't need a reverse mortgage. And I say, they probably don't. I lived 3 months in Africa, and here's what I discovered, guys. I didn't need electricity because I didn't have it. I didn't need running water. I didn't need toothpaste. I didn't need toilet paper. I didn't need ice. I didn't need any of those things. But when I got back to the United States, I wanted them all. Your client doesn't need a volatility buffer. They can just suffer the loss and roll the dice. Maybe the Titanic will sink. Maybe it won't sink. So you don't need that. But if you know what it does, wouldn't you want it, right? Wouldn't you want it? And that's the question here that we talk about. Advisor says, my clients have never asked about a reverse mortgage. I said, they have. 35 ways they've asked you about a reverse mortgage. They just never use the word. I said 3 million people went to Lowe's, Home Depot, and bought a drill last year. Nobody wanted a drill. They all wanted a hole, and the drill was just the tool that helped them to get the hole they wanted. So your clients, they don't know the reverse mortgage is the tool, but there are 35 ways that they're saying, I got a hole. I need to fix this. And all this does is to say, here's a tool. Life insurance is a tool. There's some tools that you don't need it, but you can drill like we did back in the country, just a hand drill, and you may want the power tool here. All right, I'm digressing into stories here.
We'll finish with this thought that you just both alluded to so beautifully, is this reality of there's lots of things that we don't think we need because of the current thinking that we have about them. And then we begin to explore investing in our greatest assets, ourself and our relationships and our faith and our friendships and family and all of that. When we begin to explore and lean into that and go, is it really as good as it can get? We begin to shift from need to, well, now that I understand that, I want as much as possible to be able to give my family and the things that matter to me the most clarity and peace of mind, and leave them with a legacy instead of a debt. And that is what I think we're all similar in, is that we just want to help who wants to help themselves. And if that's important, then we're going to educate as long as we possibly can and provide resources to do so. So Don, we really appreciate your insight, your expertise. I think we're probably going to need to have you back on to go through a whole session of how the 27 boxes and the reverse mortgage and whole life are all just tools. And when they're all flowing together and in alignment, you walk straighter, more upright, with more clarity in a direction you can't wait to head because you know why you want to go there.
Absolutely. And sometimes, gentlemen, people overlook the obvious. You can edit this story out, but there's down in Falmouth, Kentucky, State Route 27, there's an old fella had a sign out front and said, talking dog for sale. Have you heard this story before? Talking dog for sale. And folks kept driving back there. He's crazy. That old farmer's crazy. And finally, a fella just pulled over out of curiosity, went up on the porch, says, you got a talking dog for sale? I said, yes, sir. He said, where's it at? Says, out back. Can I go? And he goes out and sees a dog out there by the dog house and said, dog look regular. And he goes up to the dog. Dog whirls around and says, hey, man, how you doing? And the guy says, what? He says, you talk. Oh, yeah, I talk all the time. Anybody want to talk? I'll talk to him. He says, well, how long you been talking? He said, ever since I was a puppy, I've just been able to talk. He says, I talk in all types of different languages. He says, is that right? He says, yeah. Sometimes the government I'll go and pretend I'm a seeing eye dog on a spy mission. I'll go to Russia, China, translate for them, Thailand, African countries. And the guy says, that's amazing. He goes back out to the front porch, says to the farmer, he says, man, how much you want for the dog? He said, $5. He said, $5? He said, man, that dog's amazing. He said, did he tell you about going to Russia and China and spy adventures? He said, yeah, he told me all that. He said, he lies. $5.
Yeah.
And some people just overlook the obvious with whole life insurance. And hey, guys, keep pushing the stone. I know what you do. I know the value you bring. Keep pushing the stone. And some people will just say $5 and they won't see the value of it. And some people will say, I'll give you $5 because I'm taking that dog, and they'll see the value. So
Absolutely.
you can edit that out if you want. But
No, that was so good.
it's
Don,
been
we
my
appreciate
pleasure.
we
My
appreciate
joy.
you showing up and educating all of our listeners, and we look forward to them getting to experience the value that you brought to us, that we've been able to share with them through us. So till next time, we appreciate you watching. Hit those likes and subscribe buttons, all the things that help us get the message out if it's been valuable to you. And until next time.